the Saturday live stream. And today, because everything is really heating up, and of course, when we have this bullish mentality, it's like it'll go up forever. And of course, in the bear market, it seems like it'll never go up because it's all bear sentiment. And of course, when we're chopping sideways, is the exact same thing. No one really believes that we can get out of these trends until it actually happens. And because of this, it's important that we get prepared now for the point where we're going to have to sell at some point. Now, there's a lot of different things and a lot of different criteria that you can take into account as to what is best for you. Some people are going to diamond hands and they're going to hold on forever. Some people say there's no reason to get out of Bitcoin. They're going to give that to their kids and grandkids and just let it go and proliferate throughout generations and eons of the people that are in their family, and that's fine. For other people, they're like, you know what? I got a massive amount of bills and I got to pay some things. So that's great for moving into generational wealth. But right now, let me take a little profits just to make sure that I can actually pay my bills, feed my kids, and to make sure that I can actually afford the mortgage before I get evicted. So wherever you're at in that continuum, I'm not here to tell you what to do. I'm not a financial advisor. I'm definitely not your dad. So you can do whatever you want to do. But this is just my plan moving forward. And of course, like I said, the sentiment right now, we are at March 9th, I believe. Correct me in the comments section. 2024. We've got a Bitcoin halving coming up on April 20th. Everything is ripping. We just got past another all-time high for Bitcoin just yesterday. So this is the time to actually prepare and go from there. So what we're going to do is, there was a video I made about a year ago, and I talked about when I'm going to sell between 50 and 80% of Bitcoin and my alts, the indicators I'm going to use, and kind of move myself into that criteria and actually that mentality. And it's good to review this right now, because at some point you're going to have an internal war with yourself. And that internal war is going to ask you, why are you selling right now when we did a 10x? Because if I did a 10x, it can do a 50x. And of course, if you do a 50x, of course it can do a 100x. And if it was 100, you know where I'm going with this. So at some point, just maybe think about taking some profits and kind of going from there. So what I want to do is we're going to do a watch along. This video was recorded about, again, roughly 9-10 months ago. And what I'll do is, as we go through each section, if there's a ton of different questions that come up in the chats, I will stop the video and I will answer those questions to the best of my abilities, and we'll go from there. So without further ado, let me get the right pieces here. And here is the video. Let's take a listen. And again, any questions that you have, I'll go through those. And let's do it. Today we're going to talk about selling crypto, more specifically what I will be doing with my crypto, when I'll be selling it, and the percentage and the amounts I will be selling as things come up. So before we get started, we're going to go over a lot of things. We're going to talk about what everybody should know first, which is how to define yourself as far as your trader type and know your exit. We're going to get some DCA examples. I'm going to talk about everything that starts with Bitcoin, the Pi cycle top. Then we're going to get into altcoins and the things that we should be looking at, which is the NUPL, MBRVZ score, risk assessments, those types of things. And lastly, we'll talk about exchanges and the mentality to get through this. So first things first, what I want to share with you is a quick little story about the Dogecoin millionaire. And this was a great video from Graham Stephan. And he went and just talked to this gentleman, the Dogecoin millionaire, who invested roughly $180,000 of his money into Dogecoin when there wasn't really even a penny for quite a long time ago. And it went from less than a penny, there's $180,000, turned into $1.2 million in roughly 69 days. Unfortunately, as time went on, he did the same mistake I think we all do, which is believing that it's going to go to the moon and it's going to go to $1 or $2 or whatever it was supposed to be. And unfortunately, as time went on, his portfolio took a look, and in not too much time, it was down to $323,000. And that is, this was shot about 3 months ago or so, and I'm sure it's down even more so. Today, it is September 21st. Bitcoin's around $19,000. Ethereum is around $1,200, and so on and so forth. So I want you to have this ingrained into your memory, because Graham's going to ask him, wait, I can't go forward without mentioning that when I did this video, Bitcoin was $19,000. Remember that? Remember those days? And everyone was laughing at us because we were dollar cost averaging. They're like, why are you doing that vaporware? That's the dumbest thing you could ever do. You know it's going to go to zero. Dan Pena says it's going to go to zero. Jim Cramer is always talking about it's going to zero. There's no reason why you should be actually investing in this. Who's laughing now? Anyhow, just wanted to make mention of that. 19K. Ooh, those are good days. Let's pull this together and keep going. Very simple question, and he's going to answer it. And I want you to remember exactly what he says. Just take a listen.
Now, do you regret holding so long? Ooh. Yeah, you know, human. Yeah, I should have sold some.
So yeah, that's an understatement. And actually that 1.2 million actually ballooned up to 3 million before it crashed down to probably now around $200,000. So remember, you can write it all the way up and you can write it all the way down. The choice is up to you, which leads me to my next point, which is there's a phrase I use a lot, which is time in the market is more important than timing the market. And it's very true. I mean, the longer that you stay in, usually the better it is. But that's for a very broad time horizon. I will just remind you that today is 2022, September, and we are looking at a Bitcoin price of 18,846. And as a reminder, if you would have bought in December 2017, the 16th of December, you would have been up 19,040. You would be down $1,000 right now on your Bitcoin. Again, it's all about your time horizon and how long you want to expand yourself out. But along the way, there may be opportunities to take some profits. Nobody ever went broke taking profits. And again, I can not stress this enough. I'm not a financial advisor. I cannot give you financial advice. You have to do your own research. These are just the things that I am actually doing. So if we take a look here, the thing that we really should be talking about is what everybody should know first, which is before selling or anything, you have to define your trader type, and you need to know your exit before your entry. What I'm talking about is this. There are many various types of traders out there and investors. There are scalpers. Those just take seconds and they move very quickly. Day traders, minutes to hours. You have swing traders, which you could wait. They could open up a position, wait days. Position traders could wait weeks or months. Or then you got somebody like myself who's like a cycle trader, which takes years to play out. Now, I kind of go between position trader and a cycle trader because I wait for quite a long time to unpack my bags as they were. And then also, if you want to just do a quick down and dirty example of profit, this is the most basic one you could probably think of. So let's just say you want to know your exit before you get into it. This would be an example. You say, okay, I'm going to buy Bitcoin at whatever it is, $10,000. Bitcoin doubles its price to 20. I'm going to sell about 11K, which is my initial position plus a little bit of profit. And I'm going to let the $9,000 that I have into Bitcoin just ride. Maybe it goes up to $1 million and becomes the reserve world currency, and I am loaded for the rest of my life. Maybe, but that is just one example. And I will tell you this, for the examples that I've used, the things that I've done, this was my exit strategy last cycle. And it was just taking fractals, just taking a look at where things had gone in the past and extrapolated those numbers to see where they could potentially go. And some were wrong and some were pretty solid on. Now, Ethereum was wrong. I thought it was going to 10,000, and I would dollar cost average in and dollar cost average out. And unfortunately, I was only able to pick up the very first point and sold along the way, but not too much. Chainlink, it was actually right. I thought it would go to $35. It actually went to $51. And the problem with this one, I think everybody knows, is that unfortunately I had a plan in place, but I didn't stick to my plan. And if I would have stuck to my plan, I would have made a lot more money on selling off Chainlink, because right now it's worth way less than $26. Bitcoin, again, I thought I'd go to 150,000. That didn't happen. Also, EOS, that did not happen. I thought it would go to 30. That was a bad one. Cardano, I thought it'd go to $30. It did, roughly around, I think it was the all-time high was 297 there, December 3rd, so pretty right. And then Theta, I actually got that one right. I thought it'd go to $10 and it went to $14. But so these are just the examples I used before. But I think there's a better way. And I put that video out not too long ago, and you can find this on the website at Dan Teaches Crypto, which I took a look at cycle top callers, the Pi cycle top, NUPL time and risk, and also the cycle bottom, MVRVZ, 2-year MA, Puell multiple, and reserve risk, to just get a better assessment of what could be considered the actual cycle top. But there's one more thing we really need to answer ourselves, and that is that what kind of investor are you? Because you have to understand that the more conservative you are, the safer you are, but maybe not as great as returns. And this is the thing that I always struggle with. So as an ultra conservative type of investor, that could be you. This is how I started out. 100% of everything I bought was in Bitcoin, and that was it. I didn't do any altcoins, nothing like that. As time went on, I got a little less ultra conservative, just a conservative, and I'd have Bitcoin about 90% of my portfolio, then 10% was Ethereum. And then you could go down that rabbit hole and go, well, I'm going to be a risk taker, and I'm going to go 50% of Bitcoin and maybe 40% the top 20, and then 10% could be 30 to number 1,000 of the cryptos and get really down there. Or you could be just a total degenerate and just go, okay, Bitcoin, I know is the safest one, but I just want a sliver, and everything else will be in like the number 200 to 3,000 S coins and things like that. So when you look at these, remember that if you're getting into these investments, the risk versus reward, so a lot of these are very risky, but the reward are high. But then, of course, you have the chance of losing everything. And before you knock any of the degenerate moves, I will just say this. We have 2 channels. This is Digital Asset News. The other one is Dan Degen. And so far, they've done so well. So Gensokishi, ETHEREUM, Fame, and Sweatcoin. When we got into these prices, Gensokishi was 0.01, about a penny and a half. All-time high was $1.62. Not too bad. ETHEREUM, Fame, Sweatcoin, so on and so forth. So the thing that you have to remember is when I'm getting into these cryptos, what is my risk versus reward? So the best way to take a look at that is to show you through a website called DCABTC.com and also DCA-CC.com. DCA BTC, it only shows you Bitcoin. I'm just going to show you a quick example here. So let's just say, for example, that you have $100 and you want to purchase $100 worth of Bitcoin every week. And if you do that for the last 6 months, you would be down almost a percentage just buying things because the market's awful. But let's just back this up for a second. Let's just go over the last, 5 years. 5 years, and we go 5 years when we accumulated. And in actuality, if you would have done that $100 every week, you would get $26,100. Your total value for Bitcoin would be $105,000, which is not too bad. However, at the top, it would have been $162,000, depending on when you actually sold. So that's just Bitcoin itself. What I want to show you, of course, is that's pretty good. It's a very safer play in the most volatile market. But what if you could do that with Ethereum? That's why I like this website, DCA-CC. I'm going to do this. Let's do $100 again. And we do that on a weekly basis. And I picked January 12th, 2018, which was one of its highs back in the last cycle to today. And I'm going to click on calculate. And you can just see right here that, yeah, it was a little bit riskier, Ethereum being what it is. But actually, if you take a look at it, at the peak, you would have invested $20,000, just like we did with Bitcoin, but the balance in fiat or cash would be $339,000. Let's take it one step further. Let's go to Cardano. The same thing. Let's change this up. Let's put $100 every week from same time frame, January 12th, 2018 to September 19th, 2022. And if we do that, and then of course we calculate, we're going to see that in all honesty, we could have done pretty well. And if we go up here to the very tippy top, we would have invested $19,100, somewhere around there, and we would have had $706,480, which is not bad for 5 years of work at the very top. Now, it's worth much less. And the problem that we have is people always talk about diamond hands and never selling, and they're just going to give this all to their grandkids and it's generational wealth. Look, if you want to do that, that's fine. I'm not here to judge you or tell you what to do. Again, I'm not a financial advisor. However, when I think about these things, I think that's not what I'm going to do, and these are not my goals. The things that I do are what I do. And of course, you can take this information and roll it into your research to do your best thing for whatever best suits you as far as investments. So I also, when I take a look at this, when everything goes up, you start to think, oh, well, I just need to keep going up because that's what happens in markets, right? Well, no. However, there is an opposite thought process, which is, this is from CNBC, and it talks about how the chart below shows how if you invested $10,000 into the S&P 500 index for a 20-year period between 1999 and 2018, this is how it would have performed. If you had just left it there and never touched it, your $10,000 will be a whopping $30,000, which is pretty good for doing absolutely nothing. I'll be honest with you. And the average annual return is 5.6%. But if you would have just missed 10 of the best days, 10 of the best rallies that were out there, your value would be less than half of what it is. So your average annual return is about 2%. Miss the 20 best days, negative 0.3. Miss 30 best days, and so on and so forth. So again, when we talk about time in the market is more important than timing, that is true. The thing that we have to remember is that at some point, we're going to need to sell, at least for me. That's not for you. And I will just finish up with this. Those examples I gave you with Cardano and Ethereum and Bitcoin, and even this one with S&P, things look pretty rosy. But remember, it's still a risky market, no matter what you get into. Here's two examples, a dash of salt. So these are two crypto projects that were pretty prevalent in the last 2017 bull run. And you can see Dash did an amazing job of going from $3, $4, all the way to $1,000, almost $1,500. And then, of course, what did it do after that? Not much at all. And then off we go, and that's absolutely nothing. And there's a worse example here, which is Salt. Salt was a lending platform, did very well. SEC got involved, and there was a lawsuit, and it was almost at $15. And what has it done after that? Not too much. So remember, things that you do could be extremely risky depending on what you get into. So having said all that and the warnings and things like that, let's talk about how everything starts with Bitcoin, the Pi cycle top. So if you're not familiar, we did a pretty in-depth video about the Pi cycle top. Again, find that at Dan Teaches Crypto. And when we took a look at it, Pi cycle top was created in 2019. Retrospectively, it could call the top almost to a T. And then it almost called the top in 2021, a little bit off, but that's just how it is. So what I want to take a look at was, well, how accurate was it? And of course, if you're not familiar, Pi cycle top uses the 111-day moving average and a newly created multiple of the 350-day moving average, which is 350 times 2. When the 111-day moving average moves up and crosses the 350-day, we see that it coincides with the price of Bitcoin peaking. And I just thought about that. I go, maybe let's see how accurate it actually was. So here's the Pi cycle top and how it's called the top in every one of the cycles. And just for reference, when I talk about cycles, I mean the 4-year cycles for Bitcoin. Everything starts with a halving. The first one was 2012. You have a halving, and you get an all-time high. And there's a dip, and there's a reset. And the same thing happened again in 2016. There's a halving, 2017 all-time high, a dip, and a reset. And then coincidentally, the same thing happened in 2020. We had a halving, all-time high, and we're seeing a major dip and probably another reset in 2023. But I think we'll be back on track in 2024, 25, 26, 27 as things kind of work themselves out. So when we take a look at, again, the Pi cycle top, the first one, the first cycle, it actually was very close. Not perfect, but pretty close. So you can see here that this point, the lower part here where it has the price of $141, that's what it retrospectively took a look at and go, that was the top. But actually it wasn't. It was $214. So that was the first one. The second one is even more strange. It called it out at 1,090, when in actuality, it was 1,184. So pretty darn close. And this was the only time you had a double top in roughly the same time period, the same cycle in 2013. So it did in April and it did in December, which is actually, let me rephrase that. It said in November 29, 2013 was the Pi cycle top. And then in April 2013 was the Pi cycle top, which is very interesting because in 2021, the Pi cycle top was in April 11th, 2021. But the actual top was in November 2021. Just something to think about. So second one, now here comes the third one. In 2017, it nailed it. Absolutely nailed it. And there is no higher. It's hit it at 19,326, or roughly around there. So I think no one could fault you for selling a little $100 off here and there. And that's a good one. And then the fourth one, of course, like we just talked about, April 11th, 2021, the Pi cycle top called the top at 60,148 when the actual top was November 8th, 2021 at 67,000 492. So again, these are still good numbers, but you have to remember this. Everything starts with the Bitcoin pump and then alts pump. So I took a look at the historical snapshot of 11th of April, 2021, and Bitcoin, the price was 60,000, Ethereum was 2,100, Binance Coin was 525, XRP $1.36, and so on and so forth. And what I did was I took a look at the top ones and just compared what the Pi cycle top price points were compared to what they actually were on different dates. So Bitcoin, of course, April 11th was 60,000. The real one was on November 8th, and it was at 67,000. So 11% difference between the tops. So even if you would have sold here, you'll only be 11% away from the top. Not too bad. Ethereum, you were off quite a bit, actually. April 11th, it was 21.57. November 8th, 48.50. That was 55%. Binance Coin was only 22% off. Not too bad. XRP, 24%. Cardano was way off. April 11th was 127 and actually peaked at 296. That's a 60% difference. However, Polkadot, Litecoin, and Uniswap were pretty darn close, 23, 34, 30. And the biggest one that was the biggest outlier was Solana. It was 27.93, the Pi cycle price. The real all-time high price, 259 on November 6th. So that would have been an issue. However, this is what I always think about, or I'm starting to think about a lot more now, which is DCA in and DCA out. I'm going to dollar cost average in, like we all know, everybody talks about on YouTube just about ad nauseum. But I think that's just half of the equation. You have to dollar cost average out. And what I'm going to do, and I hit that Pi cycle top on the next one, because we had a long way to go. We have a very, very long way to go when that 111-day moving average crosses over. I will be selling 50% of all of my crypto. And I'll tell you exactly why later. I'll be selling 50% of all my crypto. Does that mean that I will miss out on some tops, some various ones? Yes, like maybe Ethereum, Cardano, or something that isn't even in the top 100. I could definitely be missing out, but that's okay because it's all about averages. So I'll be selling 50% of my crypto, and then I'll be waiting for some different signs, and I'll sell another 20%, and then 10% later down the road. I will not hit all the tops. And my goal is to hit 60 to 80% of the tops. I will not hit 100%. I will not buy at the absolute bottom. It just doesn't work like that. And it's going to take a lot of pressure off me. Last time, I think it was just dumb luck of what I got to. I think this time, I'm going to take a little bit more look at some indicators. But remember this, everything starts after the Bitcoin Pi cycle top, which we're going to play into right now. So once again, when the Pi... Okay. So that's a lot to take in. I understand. I get you. But I just wanted to just pause for a second just to go over some questions because they were in the comments and I thought this would be perfect timing going from there. So Federico, he says, why is everybody making videos on when to sell? Cycle hasn't even started. People that are just checking this out feel that they are late. And yes, they are for maximum gains, but they can still be massive. So the reason why we're talking about it here, I don't know why everybody else is talking about it, probably to do the same thing that I think is a good idea. It's to get that preparation. It's like doing anything. If you're going to if you're an athlete, you're going to a sporting event, you have to drill and drill and drill and get to as close as you possibly can to that scenario and put yourself into it as lifelike as you possibly can. And I think investing is no different because I am under the assumption that people are going to talk about, well, Rob, this is a super cycle. You don't understand. Everything's going to keep going up, just like what happened with gold after the ETF in 2004. And I'm like, well, to be fair, the ETF for gold during that time frame, it actually did a little bit of a pump, but then for like 8 months, it was pretty flat. It wasn't like a big thing. And then, of course, it took off. But of course, there were dips along the way, especially talking about the Great Recession, 2008 and 2009. There was a time there. And of course, it was supposed to be a hedge against inflation. But regardless of all those things, the reason why we're talking about this today is because I want you to have options. And if your option is, I'm just going to diamond-handz, salt, and Dash, and Shiba Inu or whatever you're doing, and that's the only option I have, I think that's not a great play. I'm just trying to show people what I'm doing, and then of course they can pick on and go, you know what, some of that makes sense, but the other part, maybe not so much. And that's what makes things great. And Mr. Ahia says, would be quite cool to see a dollar cost averaging out tool. We're going to get into dollar cost averaging out in a little bit, but this video was done 9-10 months ago. And one of the things I talked about was DCACC.com, the website, when now mostly what I use is Ben's website, and especially for the DCA tool. But did you know, and this is, let me pull this up so you can see it correctly, that Ben has a section on his site which does exactly that. It's a DCA exit strategy. And what it takes a look at is it takes a look at the time and risk bands. And based on what that is, because, well, let's just pull this up, shall we? So macro dashboard, crypto dashboard. If we take a look at Bitcoin, as far as like time and risk bands, just because these risk bands, of course, these will change as time goes on. The riskiest 1.0 point will dictate that Bitcoin could be at $118,000. That's the riskiest. I think it could potentially go past that. I'm not going to give you a price prediction because I think price predictions are quite worthless. And I've said that many times on this channel. But right now, as far as risk levels, we're at 0.715 at 68,000. Wow, that's pretty good. 68,275. But if you go over to tools, DCA out strategies, and if you use that strategy and say, okay, hold on, DCA exit strategies, I should say. And you say, okay, let's use the price of the projected of the risk band. The projected peak price is 113. Let's just say, let's just update that to 118,000, right? And where do you want to sell at your risk band? Do you want to sell at the beginning, like 0.7 or 0.8 or 0.9 or 1.0? Do you want to be in the middle, like 0.75 or 0.85? Or do you be at the top, which would be 8, 9, and then 1? Let's just go for the middle. And what it does is this. It says, look, once you get to these risk bands, and you can do it conservatively, moderate, aggressive, holder, or YOLO, or Sea of Tranquility. It's funny. Let's say at 0.85, you're a hodler. Actually, no, let's just say you YOLO, and you're going to wait till 0.85. At that point, maybe you sell 33%. And then when we get to 0.95, 67%. Or maybe you flip back and forth. Maybe when we hit 0.85, you say, you know what? That's when I'm going to sell 60, and that's when I'm going to 30. But you can pick here where you think. You're like, I don't have the cojones for that. I'm going to go for conservative. I'm going to go moderate, whatever else. And it just kind of shows you. You can use that with Bitcoin. Let's go for ETH. I don't think the projected price is going to be that. Let's use current. Let's use projected. Let's refresh this because I don't think it's going to 118,000. That's weird. Let's just use this. 6,000, right? It's the same thing. Where do you want to go? At what risk bands? And of course, the risk bands, you can find those over here. And if you're curious, because I actually am now, what's the risk bands for? Wow, 0.75. At 1.0, ETH is at 8,737. So take that with a grain of salt. That's what it is. I like that tool because it kind of takes some of the guesswork out. And if you're a fan of DCAing in, you can DCA out using that tool. If you want to check that out, the DCA tools are 100% free, but that DCA exit strategy, that is a paid service on his site, but I think it's at the lower tier, so not a big deal. Did you know assets? Did you know assets? That's a good one. Ask the question. You may cover this, but a hard lesson to learn is setting aside portions of gains for taxes instead of reinvesting it all while chasing gains. And that's true. And I think it's someone else said the same thing. Trump's a chump. The names. Taking profits and pay 30% in tax. Depends. So, and we just talked about this yesterday. We just had David Kemmerer. He is the founder and co-CEO or CEO and co-founder of CoinLedger. And what we took a look at is in different countries, it's different things, right? In Germany, if you're holding for over a year, you're not paying capital gains tax. If you're in Portugal, you're doing pretty good. If you're in Dubai, you're not paying anything. If you're in Puerto Rico, you're not paying any capital gains tax unless it's crypto that you brought over like myself, and I will be paying taxes on those. And also it depends on, because we're in a progressive tax, it starts off at, and depending if you're single, married, and you're filing single or jointly, or if you are married, filing as a single participant, or if you have kids or whatever else, it starts at different thresholds. So if you make over 250,000, that's when things start. So if you're below that, your tax for capital gains may be only 10%. It just depends. And we talked about that yesterday. I'll link that video in there from there. But yeah, it's a good point to say, but try to put things away. But if you're having gains, and you're like, you know what, I like these gains, I'm going to take a little bit out and stick there, which you could actually say, well, I need these gains for, I have a massive credit card debt. I got to pay, for these kids to get their college education. I got to pay for blah, blah, blah. Or I got to pay for this new kidney, whatever. So those are good lessons to have. And of course, that would just take care of budgeting. But yeah, it's a good thing to remember, good thing to bring up. And Pedro says, Michael Saylor advice, buy the top forever. It's kind of work. And this is, even though we're talking today about selling, you know that you'll never get off this merry-go-round, right? Like it's like that scene from The Godfather. Try to get out, but they keep pulling you back in. You are never, for most of you, and me and myself, we're never going to get off this train. We're going to take profits. We're going to try to do the things that we want to do with it. We have to, we have bills. We want to pay off this, do with that. But at some point, if we stick it just in the euro, or we stick it in pesos, or we stick it in the dollar, or whatever else it is, because of inflation, money is not working for you. You need to do something in some way to make money work for you. And that usually is assets. And there's no harder asset than Bitcoin that's out there. So again, to sell or not to sell, for me, I know that when I take these gains, and there was a question here from Ben, what do you take your profits into? It's a good question. I will put a portion of those into stable coins, probably USDC. And I think if you want to think that all stable coins are created equal, go take a look at UST from Luna and and talk to all those people that had that collapse on them. So it'll be some in USDC, some in cash, and then there'll be some in some other type of assets we'd like to get into, which would be more real estate and land and stuff like that. So it's just a little piecemeal of things before we take it to the next step. But if you have any more questions, put them in the comment section and we'll go from there. So now let's finish up this section, and then we'll come back and we'll do more of the Q&A. Let me share the tab the right way. There we go. And we're off. Pi cycle top hits. I'm going to take a look at not just the Pi cycle top indicator, because that is the first one I'm going to look at, but there's various ones I'm definitely going to look at. And that is the net unrealized profit and loss. I'm going to also take a look at historic risk levels, MVRV score, and the Puell multiple, just to get a bearing. Now, I don't want to do too much analysis and get paralysis by analysis. I just want to look at these and go from there to see if I'm in the right ranges. Again, I'm not here to time the absolute top at 100% or time the absolute bottoms. I'm just trying to get close as I possibly can. So retrospectively, if we look back at, we know the Pi cycle top, the top was April 11th, 2021. So if I was to, on that day, take a look at the NUPL, let me just blow this up here. And what I like about this, this is from Look Into Bitcoin. And these charts are available for free. They're high quality. I love to use them, first of all, because they're free and they're great. And it makes things very simple, right? When you're in the pink range, it's probably a good idea to, because this is when everybody's greedy, probably a good idea to take a little bit of profits. Maybe, and also in the orange part as well, optimism, anxiety. When it gets down into the green area, probably a decent time to think about accumulating. We talked about this at length on the channel. But if we take a look here, we can see this expanded view, and we can take a look all the way back to 2010 and go forward. So what I'm going to do here is, of course, we know that the Pi cycle top was April 11th. So I will zoom back in so you can see it in all its glory and just take a look at where we're at. So again, if I was looking at the Pi cycle top and I think, okay, April 11th, the 111-day moving average crossed over. So this could be the time to sell. Maybe I'll take a look at the NUPL just to make sure, and just so everybody's on the same page. And again, we covered this at length on the last video, have a plan, but just to make sure everybody's here. When we take a look at the NUPL, the indicator is derived from market value and realized value. Market value is the current price of Bitcoin multiplied by the number of coins in circulation. Realized value takes the price of each Bitcoin when it was last moved. So you've got some whales that haven't moved them for quite some time when Bitcoin was $100. So by subtracting realized value from market value, we calculate unrealized profit and losses. Unrealized profit and loss estimates the total profit and loss, paper losses in Bitcoin held by investors, or profits. So again, as time goes on and prices fluctuate, you can see this is a pretty good one to take a look at. So again, if I'm taking a look at April 11th, I'm in the orange zone, so I could say, okay, well, it's not down here and it's not in this freebie zone or point of no return, capitulation, hope, optimization, and yeah, this could be one. Now I'm all the way not into the red zone, but we haven't seen that for quite some time. So if I was looking at this, I'm like, okay, that's a second indicator that looks like it might be a good chance for me to start to take profits. Also, if we take a look at the historic risk levels, now this is from Ben's website into the Cryptoverse, and it's a great website. Links in the description. It is a paid website, but it's worth it. I'm going to tell you why. Because we take a look at these risk levels, it's another indicator which could say, okay, this looks quite interesting. So let me reset the zoom again. Again, the risk levels, as they go up, the higher they go, the more risky it is. So it's a good idea to think about taking profits when we start to peak, especially above the 0.9 reference range. I think we can all agree there. And there's only been 1, 2, 3, 4, 5 points in history in roughly 12 years. So again, if I want to take a look at, I want to zoom into this area around the April 2021. Where are we here? So February, March, April 11th. I'm actually at the Bitcoin risk level is 0.7, almost 0.8. Again, back here, it looks like it was pretty risky. However, we didn't see the bicycle top yet, even though it was a little risky, but it's high enough for me to say, okay, it's not below 5, it's not below 4, it's pretty risky. Again, that would be a check for me to move on. Another one would be the MVRVZ score. So I take a look at this, and the MVRVZ, it's a Bitcoin chart uses blockchain analysis to identify periods when Bitcoin is extremely over or undervalued. It takes the market value, price of Bitcoin, multiply the number of coins, to the realized value, rather than taking the current price of Bitcoin. Realized value takes the price of each Bitcoin when it's last moved again. And the Z-score is a standard deviation that pulls out all the extremes. So again, if we take a look here, let me just blow this up so we can see it. I'm looking for, again, April, February. Again, February was a good time, but it wasn't too great at that time. I think we're playing around 48, 50,000. So it could have been okay. But down here, March, where are we? March. April 11th. So the Z-score, again, above 5, not in the orange zone. So I'd say, well, that doesn't really tick what I thought it would, but I've got a couple other indicators, so that's not bad. And lastly, I'll take a look at the Puell multiple just to be sure. And the Puell multiple looks at the supply side of Bitcoin as far as miners and the revenue. It's calculated by dividing the daily issuance value of Bitcoins by the 365-day moving average. It uses the upper red band of the chart to show when miner revenues in USD terms are significantly higher. Okay, so again, if we take a look at, let's see, right around here, and we go to the April point, April 11th, and almost in that red band right there. So I would say yes. So again, I took the Puell multiple, which is just for proof of work for miners, things like that. MVRVC score, not so much. The risk level, I would say yes. NUPL, and of course, the pi cycle top is the one that is it. So at this point, I would say yes, I would have sold if I would have done it correctly. And this is what I'll be doing moving forward. So that would take care of the part for Bitcoin. Now, the next question that you may have is, well, that's great for all these things, but what about for the alts? Because it's a little bit different, as we just saw. We can do the same exact thing. And the way that we can do that is using Ben's website. So did you know that the pi cycle top, 11-day moving average, crossed over the 350-day moving average times 2, can be done with Ethereum. It can be done with Binance Coin, XRP, Cardano, Solana, all these things. And it can be done in one place on Ben's website into the Cryptoverse. So again, we want to take a look at all of them. So let's take Ethereum. There we go, Ethereum. So the pi cycle top for Ethereum doesn't really work out too hot, honestly, because it's telling you that it crossed over. You're looking at 21st of May 2017 when the ETH price was 148. But in all honesty, it went to over almost $1,500. And the last one it did, not too bad. 7th of March again, 17, almost $2,000. So you'd still be 50% off. That's not too great. So again, what I would do is I would say, well, because remember, everything starts with pi cycle top and Bitcoin shooting up to the stratosphere, and then come the alt. So what I would do is I would just wait and see, well, maybe we'll take a look at the NUPL. Let me change this to Ethereum. And what I want to do, actually, let me reset the zoom. You'll notice here for the NUPL, over on the looking at Bitcoin, it has on the right-hand side, it has the Bitcoin price. On the left-hand side, it has percentages as far as how much it's gone up or down. And this, of course, will be 100% of max range, or where we were at the very, very tippy top. And of course, negative almost 50% or 42% down here. However, take a look over here for Benz. For the NUPL, it's a little bit different. We've got the market cap over here and the NUPL ratio, which goes up to positive 0.5 and down to -3. Okay. We can see as we zoom out that the baseline levels around, well, of course, we have 0 here, and it goes down pretty negatively across the board. But if we take a look here, again, what we want to take a look is we want to see around after April of 2021 and what happened after there. So if I was me, now I would take a look at this. Again, I can't take a look forward because I would be looking at this in real time. So let's just say I'm back in April 11th right here at 0.479. And I think if I look back, I say, well, the top last or beforehand was 0.6. So maybe I want to get a little closer, maybe 0.55 or somewhere around there, because maybe that's not it. Because I know that Bitcoin tops and then the alts start to top. So anything after April 11th, I'd probably say it might be a good time. So let's see here, 0.51, maybe not. Around here, 51, 52. So right around here, what's this? The 3rd of May, 2021, 0.5. I'd probably want to get rid of 50% of my Ethereum at this point. So 0.56, that was 3rd of May, 2021. If we take a look here, I don't know, 3rd of May, where would that be? Not bad, 3,500. So we missed it by about 1,000 roughly. And again, I will never hit the top, but I think it's a good way just to take a look at things of where we're at and go from there. Again, once I get 50%, if it goes up some more, let's say it's across another, goes up another 10, 20%. Well, I can sell another 20% later because I have things in reserves. I will never sell all my crypto, but I'll probably sell a big chunk. So that is that part. And then also, if we take a look at MVRVZ score, let's see what that would tell us. Well, again, we're at 2021, and this is Bitcoin. I need to change that to Ethereum. Right here, let's zoom in. So, well, this looks tasty. See this one right here? Again, same thing, 13th of March. I'm looking at these points. If I'm looking at anything above 4, this would all be good times to sell. Again, taking a look at different charts and different graphs just to get an idea of where I'm potentially at. Historical risk levels, let's take a look at ETH. And let's blow this up a little bit better so we can see it. So again, above 0.9 is a good time. When do I get 0? Okay, 10th of May, the same thing. And yeah, 3,400, 3,500. Again, not going to time the top, but it's okay. And then lastly, well, the Puell multiple would have worked when it was proof of work, but now it's proof of stake. So that just kind of goes to the wayside. Same thing with Cardano and so on and so forth. So again, you can use anything that you want to, but it's putting together these different charts just to give you an idea of where things are going, to say, okay, that looks like it's a good time to potentially sell. That looks like a good time, it's a good time. And over time, and using multiple pieces of data, you can make the best decision for yourself. Again, this is not financial advice. This is the things that I'm going to be doing very closely as we move forward. And there was one last piece that I forgot to talk about, which is this. I believe in the 4-year cycles, like we talked about at length. However, that doesn't mean that this will happen in 2025. It may happen in 2024, or even 2023, or maybe even 2026 or 7. I don't know. But the thing is, you have to be aware of is you have to be conscious of the changes that could potentially take form. Don't get married to one idea like I did in the past and say, like, it has to happen at this, and it has to happen at this way. Just take a look at the data. And when the data changes, you change. But the things that I see right here, these are things that I will still look for. Pi cycle top, MVRVZ, Puell multiple, well, for Bitcoin. And of course, the risk factors. If we can take a look at all those things, I think we can get a better understanding of when to potentially sell. And that'll lead me to my last 2 points, which are exchanges and the mentality. So real quick, there's a link in the description, or if you're watching this on Dan Teaches Crypto, it'll be a link underneath this video, which says the exchanges. Here are the exchanges that I use if you want to use any of them for purchasing said crypto and dollar cost averaging. I use 4. I'm in America, so this is what I got. FTX, Kraken, Coinbase, and KuCoin. And then lastly, I just want to talk to you real quick about the mentality. To remain calm is a superpower. Bruce Lee said that, and it holds true today. And when you see in my videos and you see that we lose 20% or 50% or whatever, I don't know, whatever it is of the day, I'm pretty much the same way I am right now. I just try to stay calm because I know that this is a natural progression. For some people, it's a little bit more difficult. And for those people, I'd recommend this website, which it is thedailystoic.com. And the thing what's great about that, it's free. And you just sign up right here, sign up for the daily email, and it'll just give you some perspective from some of the greatest philosophers in the entire world has ever known throughout history. Marcus Aurelius, Epictetus, all the different Greek philosophers that really have guided me a long way. And here's this was the last email I got, which was today. And of course, they get every day. And tell me if this doesn't maybe ring true with you. Temperance. I'm not going to keep going with that. If you want to check out Daily Stoic, it's great. And of course, it'll keep you kind of, grounded a little bit. So there's a lot of things to unpack. So let's unpack those. So everybody, thanks for stopping by. I do appreciate it. Now let's go over some Q&A and go from there. So let's go in reverse. One of those things you might have noticed that in the last sector there, there was 4 exchanges that I used. You noticed? It was KuCoin, it was Kraken, Coinbase, and FTX. And at that point, I used FTX. But one of the things that, this was made during the time before FTX actually collapsed. But one of the things that I learned along the way is that even though we talk about all these things and how great it is, and of course, what we can make, it's not about how much you make, it's how much you keep. So all the things that we say today, if I had really bought into the mentality that everything must be taken off an exchange, you know how much I would have lost on FTX? I already lost on Voyager and Celsius. I don't want you to go down that path. There's a link in the description. It's called The Top Mistakes I've Made in Crypto. Watch that video. For some reason, the video we just watched has roughly about 100,000 and the top mistakes has like 20,000. I don't know why. I think people should watch the other one. So then going in reverse, a couple of, there was some, let's see, people were saying current time frame, show it's all pointless if you don't show the current time frame. Okay. So we'll go through the current time frames about these different indicators. And I'm just going to tell you right now, all the indicators that we just talked about, nothing's really telling me to sell. That's how I see it. So let me stop this. Let's pull up some data and so you can go through this again. All right. So let's go here. So we talked about the historic risk levels, right? And this is for the total market cap. Again, this is only on Ben's website in the Cryptoverse. Things will change as time moves on. But again, when we start talking about time frames or risk levels, we're talking about 0.85 to 0.9. That's what I'm looking at. And right now, the total market cap, the market cap risk for everything is 0.737. Yeah, we've had a nice run, but it's not that big yet. Bitcoin, as far as risk levels, again, is only 0.715. I think ETH is grinding up there pretty quickly, 0.75. Again, that doesn't tell me to sell. BNB is very low. Risk level 0.513. And on down the line you can go. Now we take a look at the MBRVZ score, right? MBRVZ is you can find this on lookintabitcoin.com. The link in the description, it's 100% free. It's the current price of Bitcoin multiplied by the number of coins in circulation. Right now, I think we have, 19.7 million? Correct me in the comments section. Instead of taking the current price of Bitcoin, realized value takes the price of each Bitcoin when it was last moved. It then adds up all the individual prices and takes an average. So right now, like I talked about, I love this website because it makes things easy for me. It makes things easy for everybody. When it goes in this area, in the green, it's not too risky. And you think to yourself, maybe I should pick some of that up and then see if I want to buy some. So then here we are. Why the heck is it like that? Oh, yeah. So this would be September 20. I don't know if anybody can do this, but December 4th, 2018, I don't know if you can find the price, but I'm pretty sure it was pretty darn low. And again, over here, from July 2022 to January 3rd, 2022 would have been a great time to pick that up. I'm pretty sure that's when Bitcoin was around 15,000. And now look where we're at. We're not even at the 4. Heck, we're not even at the 3. So I know people are like, things have really rallied. Data is telling me a little something different. And if we take a look, and this is color coded by risk levels. And again, what I wanted to show you is the 0.9 to 1.0s. Let me just get rid of this one. This is when those came off. February 21, March of 2021, not too bad. December 17th, 2017 and 2013. Over here, where are we? Are we at 0.8 yet? No. Are we at 0.7 yet? Yes, 0.715. And again, we can do the same thing. Let's take Solana. Solana's heating up, but it's only at 0.7. Again, not telling me to sell. Same thing with Ethereum. It's just color-coded. So 0.753. How about this one? Net unrealized profit and losses. This is derived from the last one we took a look at, MVRV Z-score. Market value is Bitcoin to times the circulating price, or coins in circulation. Realized value takes the price of each Bitcoin when it was last moved, and then you subtract the realized value from market value. It gets you unrealized profit and losses. Again, colors. This would have been a good time to buy in green. No, let's see. September 2022, November, December, same thing. And right now, we got into this maybe a little hot area, but only at 60%. I'm waiting for up here. And I could be wrong. And then the big one, and this is Pi Cycle Top. What does that show us? Well, it shows us we're not close. So let me reset this. So the Pi Cycle Top, let me change it to 24 hours. So it did a great job in 2013. And again, Pi Cycle Top is retroactively looking, retrospective analysis. And it did great in 2013. It did great in 2017. Again, it didn't do a fantastic job, but it did okay. 63,000 for April 13th. And again, that's when the 350-day moving average times 2 goes over the 111-day moving average. How far are we? We're pretty far. We're far enough, roughly the same as we were back in October. So again, this is not telling me to sell anything yet, and that's the current time frame. So there's that piece, and and I just wanted to share some insights because I learned a lot from people in the comment section. I'm not a know-it-all by any stretch of the imagination. Rogelio says this: I just hold Bitcoin and ETH. Others are speculation. Take profit, pay taxes, and buy more Bitcoin. 10% for savings. What a great play. I mean, good job. CC says, I'm behind this vid. When is he doing the TLDR version? Basically, I'm not selling right now. That's it. Let's see. Pedro asks, can you cover in a video the Denkun upgrade for Ethereum? Will it be impactful? It'll be very impactful for layer 2s. Guy over at Coin Bureau did a fantastic job on 2 videos on the Denkun upgrade. I highly recommend you watch that video because if I did it, it wouldn't be near as comprehensive. And then Logan, I've been buying all year. Great job, man. I mean, that's tough to do. But I'm selling a property next week. Where would I allocate at this point in the market? I don't know. But I mean, for me, like we just sold a condo a couple of weeks. We talked about this before. And what I did was, because my portfolio is still over 70% of Bitcoin, I just took that lump sum and I put roughly 70% into Bitcoin again. And then I divided up among altcoins, Ethereum and the Cardanos and the Solanas and some other layer 1s, the chain links, the stuff like that. And then I kind of gone down to like the 3% to 5%, got into some AI degenerate plays, and then some other stuff that I put on Dan Degen. And it just kind of went like that. To me personally, I think it's too risky to say, like, let's say you get a windfall like Logan, right? He sells his property for 100 grand. I think for me, it wouldn't make sense to go, you know what? That Fetch AI is looking pretty sweet, pretty hot. I'm going to put $100,000 into Fetch AI. Or maybe I say, I'm going to put $70,000 or $80,000 into Fetch AI and some other AI stuff. For me, I'm not at that point where I'd want to do that. But again, everybody's different. So, but it's good things it's a mental exercise. And then Des has got some good insights. Imagine you took profit living in Egypt. And this is another thing that has been spoken to me, which makes a lot of sense. Imagine you took profit living in Egypt. You lost 33% of the value of your fiat money in 3 days. Third world countries work in mysterious ways. And there's always a caveat to the things that we talk about, right? When I say nobody ever went broke taking profits, actually, that's not true. If you did that in, just like what Des said, in Egypt, if you do that in Venezuela, if you do that in Turkey, taking profits actually is the worst thing you could possibly do. So little caveats there. If you're in a first world country, maybe it's not so bad. And don't think like America is like immune to it. We've got inflation. And of course, the money printers are going to go back on pretty soon. So we'll see. Dave, you says never selling Bitcoin. It's probably going to work out pretty well for you, actually. Because let's be honest, I think Bitcoin's going to do great. There was a video from Larry Fink, and I'll probably talk about this tomorrow on the show. And basically what I said was, he was on Fox News. And basically the things that he said in this interview, which was only like a minute or 2 minutes. If you want to watch it, just follow me on X. I said, if everybody knew what Larry just said and understood what he talked about with Bitcoin, the price of Bitcoin would be between $1 million and $10 million, because it makes sense. The problem is getting people to understand. And that's why I think Bitcoin can go higher, much, much higher. I'm not going to give you a price prediction, but it's because of the lack of knowledge and the people that want to actually do the research and really sit down and understand. That's the thing that really hinders us. So anyhow, it's a good point, Dave. I just wanted to bring that. All right. Life of Rice says, personally, I won't sell any Bitcoin ever. That's going to go in a trust, which is pretty great, especially if you got kids and grandkids who do the same thing. I just cycle trade the good alts and profits wait for Bitcoin to crash. You know who else does that pretty well? Is Simon Dixon. He says, my whole job is just I'll get into alts and I'll invest in these things, but the whole thing is to have more Bitcoin than I had at the beginning of the month. Let's see. Maury says, physical silver is a great buy right now. It is a great buy. And I know like some of the precious metal people hate us. I don't understand why. I own gold and silver, and it's in my Roth IRA over at iTrust. I just don't understand why they're like that. I'm not going to say that guy's name, but he's a big gold bug. I don't understand why he's on a board with us. It just doesn't make any sense to me. But yeah, I mean, I think precious metals it should be a part of everybody's portfolio. Now, whether you want to do that or not is true. Silver does taste funny. Simon Dixon's a good man. Yeah, we all like him. Pest says, yeah, Fetch AI is at 14x since it's low, Bitcoin dominance. It's a funny thing because I still believe that the reason why this market, our crypto market, goes up so much, it's because there's really a couple of reasons. Really, it's greed, it's speculation, and it's hype. As I call it, shag. Speculation, hype, and greed. And that's what usually pushes the markets up. There's a great video over a guy over at Coin Bureau. It's in his paid site over at Coin Bureau Club. And he had a great video. It's about 25 minutes long about Fetch AI. And it really opened my eyes to what it is and what's going on. And because of that video, I was like, you know what? I don't know what Fetch will probably pump, but I'll still sell some. What is that noise? Hold on real quick. Sorry about that. And I actually sold some and I took some profits and I rolled them into Bitcoin. And of course, today what happens? It goes up like 25%. So like on some of these projects, and maybe me and Guy got both wrong on Fetch AI, it'll probably do great. Everything's going to do great in the bull market. But for me, I'm like, I don't want to get too deep into that one. Crypto Chaos says, when was this made? You said he invested under penny Doge. It went to 70 cents, so he could have had like 100 million. Or am I not seeing that in correct time frame Doge Millionaire? I searched HS1 billion. Yeah, so I made that roughly 9 or 10 months ago, but the Dogecoin Millionaire had bought his Doge, like, I think it was pre a penny, if I'm not mistaken. And he put like $100,000 into it. And this was before even Elon Musk was talking about it. So he was the right place, the right time with the right conviction, and just didn't sell. And even if you follow, like I follow Dogecoin Millionaire on X, he's a pretty entertaining guy. And he says on a couple different posts, especially lately, he's like, I will definitely be taking profits and selling this cycle. I will not hold all the way up and do a round trip. I got to tell you, it's a good one. Let's see. Crypto Revolution is a scammer. All right. Trump coin. See, there we go. And that's, I don't think we have any more questions. And then Alice Drum says, I think he's out 250K and didn't sell. Well, let that not be us. All right, everybody. So we've been here for an hour, and hopefully that helps you. And it's not all encompassing of what you should do. Just I wanted to lay this out. So thanks to everybody for stopping by. I do appreciate, like today's video, give it a thumbs up, subscribe, all that good stuff. Everything's going to accelerate as we go into the halving. But that's it for today. Enjoy your weekend. And I'll see you on tomorrow's live stream, which should be a good one. Adios. Have a good day.